If you have an LLC or you're thinking about having one, you want to watch this show because I'll be talking to you about some mistakes that you're making every single day that could cost you big time down the road. So basically, the first thing is that LLC members do not have a deadlock provision in the company's operating agreement. So basically, if you have LLC members, the members are the owners. You need to have a deadlock provision. If you do not have that right now, you listen to me. This is not good for you. You want to go back and really fix that as soon as possible. Let me quickly talk to you about what is at issue here. So a deadlock provision, or more formally called impasse resolution, is a method specified in the operating agreement that governs what happens when members with equal ownership disagree on a decision. And this will happen all the time. I don't care how good you think the membership is currently. Everybody loves each other, lovey-dovey, whatever. No, kumbaya. No, you gotta have that because you never know. So basically, a common scenario is when an LLC with only two equal members are at odds on a decision which results in a 50-50 deadlock. In other words, one member votes to get a bank loan, for instance, right? The second member votes not to get a bank loan. Think about that. So if the operating agreement states that all decisions must be made by majority vote, then what happens? This is one thing that you got to think about. I mean, this is exactly what I'm talking about. You have an impasse, right? So without language in the operating agreement that basically indicates how a deadlock is resolved, the company business could be adversely affected because you will have a status quo that's really bad for the business. And it's really important to have a clear idea about how to handle those deadlocks, especially when we're talking about very important matters like getting a loan, getting a business loan, getting a business line of credit, or actually engaging the company in a strategic venture. So those things require let's say members agreements. Okay, so be aware that many form operating agreements found on the internet or provided by LLC formation companies do not include a deadlock provision. So make sure that your operating agreement has a deadlock provision. Boss, welcome back to the show. It's really a pleasure to have you here. Make yourself comfortable. You are going to enjoy today's conversation. The second mistake I really want you to really pay attention to, if you have an LLC or you are about to have one, is that the company operating agreement is outdated. So here we're talking about what? We're talking about timing. Timing is very important. And it's really important to understand that regardless of the states where you're in, you need to always make sure that your LLC operating agreement is actually is in tune, is in sync with the regulatory landscape, with the legal landscape. And in general, if you have an LLC operating agreement, you want to make sure that you are basically updating the documents once a year. That's why a lot of LLCs, they just have lawyers, and basically they have lawyers who do these things for them automatically. And most of our clients, what they also do is they actually have a reminder in their calendar. So every year, let's say on the 15th of January, for instance, they get a reminder that says, okay, you need to update your operating agreement. So just make sure that that agreement is outdated, and so you're able to make sure that you include all the necessary language or the necessary provisions that the current regulatory landscape is actually offering. Okay, and let me give you an example. You basically, let's say if you are in a state that actually before barred, let's say, a series LLC, and now the state is allowing entrepreneurs and businesses to create series LLC. If you have a type of hierarchy in your LLC that allows something like this, then you want to include it. Or let's say you basically are in a state that did not allow member managed LLCs before, and now all of a sudden legislators are saying, this is fine. So you really want to make sure that you update your agreement as soon as possible. One thing I want to say here is that an operating agreement is not a legal document. So basically, the state authorities are not asking you to actually file an operating agreement with them, but this is for you. This is actually for you your partners, your members, your LLC members, and so on and so forth. So things are clear from the get-go for everybody. So make sure your company is operating under an updated operating agreement. Also, I want to quickly remind you to this topic, we're having a conversation about LLC mistakes that you are making or you might be making right now that you don't even know about. Another mistake that we have seen in our research is that the members do not properly document LLC activity. See, the whole thing is that when you have an LLC, right, you basically have to document everything, like the meetings. A lot of people just believe that you need to document only the meeting. If you go to a meeting, you need to have meeting minutes, right? Okay, but what about the other activities? You got to really document other operational activities to make sure that you are in compliance with the state and federal laws. And let me give you a common scenario here. You form an LLC through one of those cookie cutter companies and eagerly start to hold yourself out as a formal business. A few years later, you engage an attorney for some reason to discuss a lawsuit against the company, and the company wants to apply for a bank loan, someone wants to buy the company, etc. And you give the attorney your nice looking LLC record book. When the attorney opens the book, the only things in it are the filed articles of organization and a bunch of unsigned template documents. And it's one of those things where you do not want to have that because at that point when you need the attorney to actually help you out, if you don't have the right documents, he or she cannot help you out. So there are many reasons why you need to keep your records up to date. Let me give you a few examples. You want to prevent piercing of your legal protection. So if you are in a lawsuit, the first thing an opposing party will do is try to discredit the existence of your LLC and get to your personal assets. If your paperwork is not in order, you are helping the other side. In other words, a court of law will pierce your the corporate veil. You want to actually keep your records up to date to memorialize membership percentages. It is critical that each member's ownership interested is documented in a signed operating agreement. This is very important. You also want to define the scope and limits of management. So whether your LLC is member managed or manager managed, everyone needs to be clear on how decisions are made. Usually there are some decisions that can be made without everyone's participation, but major decisions, like whether a company will be sold, should require unanimous approval, okay? And any limits should be spelled out in the operating agreement. You also want to actually document things you want to update things to document member contributions and member loans. Almost every company deals with funding issues at some point. Usually members will transfer money and property to and from the LLC, which is normal, but these transfers need to be properly categorized and documented. It is different if you contribute money to the LLC in exchange for membership interest versus you loaning the LLC money that you expect to be repaid. If you do not document your transfers, the IRS or a court of law may do so however they see fit. So, and also you want to properly transfer or purchase assets in the LLC names. So this is kind of important as well. Another mistake that you probably might be making right now is that LLC members commingle company funds with personal funds. In other words, they're not segregating their personal assets from the LLC's assets. So the most important role when operating an LLC is not to commingle funds. This includes things like a member cannot pay personal bills with LLC money and vice versa. All LLC income must go into the LLC bank account, and all LLC expenses must come out of that account. Even small things like your monthly web domain charges, if the LLC is short of cash, the members should deposit money into the LLC account, pay the expense, and properly document the transfer of funds as either a capital contribution or a loan. And if a member needs money and the LLC has excess funds, the LLC should pay the member, and the LLC will reflect on its books that the payment is either a return of capital distribution of profits, or repayment of a loan. This is really important. We've seen in our research many more mistakes that people do around liquidities. See, the thing is that you want to avoid those. Why? Because you want to make sure that you are in a place where you are able to document everything to the IRS. Because God forbid, if something were to happen and the IRS is started picking into your operations, you are really toast, right? And you do not want to have that. And basically, as you're navigating liquidity, as you're navigating liquidity management, also make sure that you are taking advantage of all the tax benefits that are inherent to an LLC. Because remember, forming an LLC helps business owners avoid the double taxation problems of corporations. That's for sure, right? But the IRS wants to make sure that the way you manage your money will tell the IRS whether you're complying with the rules or not. And if you do not comply with the rules, then you're not able to take advantage of the tax benefits. That's why you need to comply with the rules, especially around money management, so you can actually avail yourself of the most important LLC tax benefits. Also, I want to quickly remind you of today's topic. We are having a conversation about LLC mistakes you are making right now that could cost you big time down the road. I want to talk about another mistake that is kind of related to one that I said before, and that's the operating agreement. So before, if you remember, I said that some people are not, some LLC members are not updating the LLC operating agreement. Now I want to talk about the fact that some LLCs do not even have an operating agreement to start with. This is really crazy, but yeah, I mean, basically you have an LLC. And basically, you think you file your paperwork, because see, the thing is, if you file your paperwork with those cookie cutter organizations, then basically online organizations, then you think you have everything. But if you do not actually monitor your operations, then you probably don't have an operating agreement. Now, an operating agreement is really important. Even if you're a single member LLC, you still need to have an operating agreement. Because see, people believe that you need to have an operating agreement because you have more than two members. No. You also want to have an operating agreement that really sort of clarifies how your LLC works. And if you were to invite another member later on into the LLC, at least that member will see already a properly structured LLC. Okay. And the thing is that so you have the options. You have three options when it comes to writing an operating agreement. You can actually just go online and download some of those templates. Some of those templates are good. Some are just cheap ass. They're just garbage. That's option number one. Option number two, you can go to a lawyer or somebody who knows the law in your state, because an LLC is a state affair. So you want to make sure that you actually contact someone who has experience in your area. Or number three, you can just you can actually go to those organizations that actually will create an operating templates for you. So those cookie cutter, we call them cookie cutter, but so I'm not going to name names in this paragraph here, but you know what I mean. Those are online LLC formation services. So they'll actually create an operating agreement for you. The bottom line here is you need to have one. You need to have an operating agreement, and we're talking about you have to insert things like name, registered agent, and business address, business purpose. You need to state the reason why you're forming this LLC. You need to have talk about member contributions. You need to state how much each person is contributing to start the LLC, and who can be a member, profits, loss, and taxes, management structure, the responsibilities of each manager and member, the percentage of ownership each member has, and those are the basics, okay, that you need to have in an operating agreement to make it valid. Another mistake that we see in our research is that some LLCs do not know how to properly file their taxes. Remember, when we talk about LLC, you have several scenarios that can happen, right? If you're an LLC, you can choose to file as a sole proprietorship. You can choose to file as an S corporation. You can choose to file as a C corporation. So if you're a single member LLC, by default, the IRS treats you as a disregarded entity. So basically, you do not like the IRS is actually quote unquote confusing this LLC, this single member LLC, this one person LLC with your personal affairs. This is for tax purposes. This is what disregarded entity really means. They are disregarding your single member LLC as an entity. So basically, in that scenario, you have to file all your income, your LLC income and expenses on your Schedule C when you file your Form 1040 for that year. That's the first scenario. The second scenario here is that you can be an LLC, but you file as a partnership. In that case, you are filing Form 1065. So if you file Form 1065, basically what will happen here is that you are going to send Schedule K1 and actually send that to all the partners, all the members, and those partners will file their Schedule K1 when they file their Form 1040 Schedule C. And the third, actually there are four scenarios here. The third scenario here is that you can elect to you can be an LLC, but elect to file S corporation. So in that case, you'll need to file Form 1120S. And basically you also send a Schedule K1 to all the members, and those members will pay taxes at the personal level. The fourth criterion here, the fourth option rather, is that you can elect to file as a C corporation. So basically you have to file Form 1120. And but one thing I need to say here is that 1120 has double taxation. So you're paying taxes at the business level, but also paying taxes at the personal level. So those are the four things. But the thing is that a lot of LLCs do not have a clear idea about when it comes to file their tax filing. Another mistake that you might be making right now is basically, I think I've said this before, but I want to insist on it in a very clear manner that, you need to segregate your personal finances from your business finances. This is so important. We're not just talking about you actually being at risk of having your veil being pierced by an opposing party. It's not just that. The thing is that if you have an LLC and you do not actually divorce your personal assets from your business's assets, you're actually making yourself a big disservice, because you would not be able to manage the company properly. For example, if you are quote unquote confusing the LLC's the cash inflows with your personal income, you will never know if the LLC is properly funded, right? And what will happen here is that you can actually think a company that is generating a lot of profits is always out of cash, because you are using the cash for personal reasons. So, but if you are able to separate your personal assets from your business assets, you can analyze the LLC as a standalone entity and see what's really happening in terms of liquidity, in terms of revenue generation, in terms of profitability, in terms of operational stability, all those things that are important anyway, not only for you but also for potential creditors. When you're trying to get business credits, when you reach out to net 30 vendors, when you reach out to business lenders, when you reach out to a constellation of stakeholders, they will look at your LLC and see it as a standalone entity, which is what you need anyway. Okay, so do not actually confuse. Do not actually join your personal affairs versus your business affairs. You do not want to do that. You never want to do that. You do it. You want to preserve your personal assets, because you never know. Okay, we are in business, and everything can happen. You can get sued, and you do not want to lose everything. I mean, you could lose just all the assets that are actually inherent to the LLC, but nothing more, and nothing, because see, when there is a lawsuit, the first thing that, I think I've said this before, the first thing that the opposing party wants to do is to actually get to your personal assets. And your job as an LLC member or as an LLC owner is to actually have a wall. You need to have a firewall that actually shields you from that sort of liability. Okay, so it's important to understand that if anything I'm telling you sounds like a foreign language to you, it's better that you reach out to a legal representative, a lawyer, somebody in your area who has expertise with LLCs, and that person, that lawyer, can help you out. In the meantime, if you have any question, our team members are very happy to. Will be really happy to answer that question for you. Please leave that question in the comment section. Tell us the state you're actually commenting from, so we have a clear idea what the laws are in your area, and we can actually answer you pretty clearly. Thank you so much for your attention. I really appreciate it. Into this conversation, I was just talking to you about LLC mistakes that you're making right now. And so just kind of quickly wrap up, we talk about things like operating agreement not being updated, an operating agreement not being there in the first place, right? Taxes, so not filing the proper tax structure, not actually documenting your activities, for instance, and also not actually separating your personal assets from your business's assets. Thank you so much. God bless you. I'll speak to you another time. Until then, remember, stay marvelous.